You know Oatly, right? They're pretty much everywhere in the plant-based milk aisle. But for years, one thing has been missing from their story: profit. Well, that just changed. So today, we're going to break down what their CEO had to say about their huge third quarter and how they finally turned things around.
And boom, there it is, the big headline. On the company's latest earnings call, the CEO, Jean-Christophe Flatin, came out and said it. For the first time since their IPO, Oatly is actually in the black. This is a massive, massive moment for the brand.
All right, so let's get into it. What does hitting profitability really mean for a company like Oatly? I mean, it's got to be about more than just numbers on a page, right?
So here's the thing. For Oatly, this was never just about the money. The CEO called it a crucial credibility milestone. It's basically them proving a point. It's validation that a brand can be built around a powerful mission and be a financial success. They're showing you can absolutely blend purpose with performance.
But a win like this doesn't just happen overnight, so how'd they pull it off? Well, it turns out it was all part of a very deliberate, multi-year strategy.
If you look at this timeline, you can see the whole journey unfold. It really kicked off back in mid-2022. That's when a new leadership team, including the current CEO, took over. They started this 3-year mission to get the company's foundations right, and, well, here we are with the profitable quarter they were working towards.
And wow, did that effort pay off. Just look at these results. Since that new team took charge, sales are up by more than 20%. That tells you people are still really into Oatly.
But you know, selling more is only part of the puzzle. The real magic here was on the efficiency side. They managed to slash their production costs, what the business world calls cost of goods sold, by over 25%. I mean, think about that. They figured out how to make every single carton of oat milk for a quarter less than they used to. That is a huge saving.
And they didn't stop there. It wasn't just about the factory floor. They also trimmed their day-to-day operating costs, you know, the other stuff, called SG&A, by another 25%. So it's not just about making the product for less. It's about running a leaner, meaner, more efficient company from top to bottom.
So you're probably wondering, what's the secret sauce? How did they manage to grow sales and cut costs at the same time? Well, the CEO gave us the answer, something they call the Refreshed Growth Playbook. So what is this playbook? Well, it's pretty straightforward, really. It boils down to 3 big ideas. 1, keep the brand relevant and exciting. 2, tackle the reasons people might not buy it. You know, things like taste perception. And 3, just make it easier for you to find it on the shelf. Simple as that.
And hey, the proof is in the oat milk. Just look at this. In places like Europe where they've gone all in on this playbook, revenue jumped over 12%. Now compare that to North America, where they're still in the early stages, a bit slower, right? It's pretty clear. When they use the playbook, it works.
Okay, so a great quarter, but what happens next? Let's talk about what they're forecasting for the rest of the year, and then dig into their plans for a really important market, China. Now, you might think after a quarter like that, they'd be raising their forecast, right? Well, actually, they're playing it cool. They're sticking with their original guidance for the full year. They're still aiming for that $5 to $15 million range for adjusted EBITDA, which is a key way to measure profit. They're not getting ahead of themselves, but they're definitely on track to have their first profitable year ever. All right, let's talk about the big question on everyone's mind. What is going on with their strategy for Greater China? It's something investors and analysts have been watching very closely. So the CEO basically said, we're looking at it. A big strategic review is happening right now, and they're considering everything, even something called a carve-out. What that means is they might spin off their China business, let it become its own thing so it can grow even faster. But while they figure all that out, the team on the ground is just keeping things running as normal.
And I want to leave you with this last thought from the CEO, because I think it sums everything up perfectly. He made it super clear that hitting profitability, that's not the finish line, not even close. He called it a marker of progress, a launch pad for what's next. So for Oatly, it really feels like this is just the beginning. The real question now is, where do they go from here?